This is Las Vegas Sands on the monthly chart, and because it's football season, we're going to do a little analogy. So you have monthly buyers at $28, and you have monthly sellers at $74. So this is one end zone. You have the football field and another end zone, and in the middle is the 50-yard line. Um, and price has pulled back since the recent highs in May. You see right below price, you have a gap, and we're going to call this a monthly buy level because you have a rally in price, one basic candle, a gap, and then a rally higher. However, because price did not take out and close above this pivot high, it lowers the probability of this zone working. Before we continue with the analysis, let's look at the fundamentals for Las Vegas Sands. So this year's been all about NVIDIA. However, Las Vegas Sands is expected to grow revenue by 151% this year. Wall Street is eyeing revenue growth of 151% for Las Vegas Sands, expecting a strong return to travel and hotel stocks as the broader economy continues its post-pandemic rebound, which is in year 2. Now, Las Vegas Sands operates casinos in Macau and Singapore. Is planning the development of a property on Long Island in conjunction with Canyon Ranch Company. However, most of the revenues are coming from Macau. Analysts expect Las Vegas Sands to post 10.3 billion in total revenue this year, which would mark a 151% increase over 2022 revenue. And this is in contrast to pre-2022, where revenue declined in late 2021 and early 2022, but then plateaued, and then revenue started to increase in the quarters near and ending in September of 2022. All right, so let's talk about profitability. We talked about the revenue. Wall Street expects the company to earn $2.08 per share next year. That's seen rising by 52% to $3.16 a share. Since last year, investors have gotten accustomed to tech stocks like NVIDIA, largely due to optimism around AI. Don't forget about energy stocks. They were the in class asset class last year as inflation increased, and so did oil. However, there was a decline in oil, but it's coming back with resurgence. Travel and leisure, particularly outside of the airline stocks, have been a surprise winner this year. Airlines are getting hit now again because of oil. Oil is above $90 and could be heading higher. Despite forecasts of a yet to occur recession, Americans have been surging at hotels, restaurants, casinos, bars for airfare and other travel related activities. Some say we're going to be entering a recession in 2024. Some say we're going to have a soft landing. It's hard to say, as inflation is ticking up once again. That's a pretty stark contrast with Las Vegas Sands performance. A glimpse at Las Vegas Sands chart gives you a clear picture of the stock's 3-month decline. As we saw, the stock began its downward trajectory in May, but the sell-off accelerated in July following the company's most recent earnings report. So it's really all about the opening of China. As long as China is not rolling on all cylinders, you're not going to have citizens of China flocking to Macau to gamble. Analyst forecasts seem to suggest that Las Vegas Sands analyst ratings show a consensus view of a moderate buy, price target of $70.73, which represents an upside of 44%. Now that $70 is just below the monthly sellers level at 74, so that's a good target. All right, let's talk about valuation. For investors looking for a stock that has potential to rise, which they can nab at an attractive valuation. Las Vegas Sands could be a strong candidate. You got 66% of 2019 EBITDA. Our positions to see strong revenue growth in 2023 after China's removal of COVID-19 restrictions in early January. All right, so you got a picture of the fundamentals. Getting back to the technicals, we're going to drill down to the weekly chart next. And right now you have momentum to the downside. It is making lower highs and then lower lows. However, this past week was an indecision candle, and rightfully so. Price is pausing right above monthly buyers. Now, I don't love the price action, but I can't ignore that this level had a surge in price, which took out the pivot high to the left. So you had a rally in price, 1, 2, 3, 4, 4 basic candles, a gap higher. But if you look at the volume bars, they were below average volume bars. So you need confirmation if you're going long here. Let's go down to the weekly chart. And that one candle, doji candle on the weekly is equated to, 4 or 5 basic candles on the daily chart. Yeah, so I don't see much here. I don't see much here. It's too much trading at this level, which is telling me there's not really an imbalance between buyers and sellers. However, it could be a turning point. Again, price is off roughly 20% from the most recent highs. But what I would want to see is a drop in price, a double bottom, W formation, test the apex of the W, and then move higher. First target is going to be $53. That's where you have a gap fill, or $52 rather. I'm not convinced on the leisure category. We've seen high delinquency in credit cards, car notes. 90% of all the pandemic money is spent. So I'm not convinced that travel leisure category is the way to put your hard-earned money. But nevertheless, if the technicals are aligned with, the fundamentals, then it's hard to not go with those two that are in alignment. Thanks for watching. Subscribe. Please like the video.